All right, Bulls and Bears back with another dose. We got a lot of economic financial news to get caught up on. As always, the news is just coming in fast and heavy, folks. We've got consumer confidence has just plunged to the lowest level since the health crisis. That's right. We're, as a collective, consumers, people, middle class, working people, we're more scared now and concerned about the economy than we were at the beginning of the health crisis. Of course, what happened with the health crisis? The health crisis, if you want to call it that, should have been highly deflationary. We should have witnessed crashing prices because of all the job losses and the shutdowns and everything. Of course, just the opposite happened. They put a floor under prices and pumped all kinds of stimulus into the economy. And we all know what happened from there. We'll talk about home prices here later in this report. A lot of news coming out in the housing market, the housing bubble, home price levels, all that. But consumer confidence plunging to the lowest level since the pandemic. Well, how can it not? I mean, everywhere you look, there's people talking about tariffs and how much higher prices are going to go. And I guess I'm part of the problem. I'm talking about tariffs, but that's what people are concerned about. That's what's in the news. That's what the big deal is right now. And when you think about it, it is kind of a big deal with price levels already where they're at. Inflation's been a story now for years. People that never used to even follow the financial news, they're realizing how this thing works, how prices can just keep going up and up and up and never come down. Under conventional wisdom or normal thought, if you will, people thought that when prices got too high, well, they just had to come down because nobody can afford things. So prices have to come down to match what people can actually pay or afford. But then they find out, no, as long as people can continue to borrow money, prices will continue to go up. As long as there's more buyers, regardless if they have to borrow the money or not, if there's more buyers on the sidelines, prices will continue to go up. And if you don't have enough sellers, in this case, not much inventory, we're at what, a 40-year low in the housing market as far as transactions. But inventory is creeping up somewhat. In fact, we're at the highest we've been in a few years. We'll talk about that later, though, in our housing information that we want to get into here in this video. But according to some data, we already have some tariff-induced rising prices. Here's some recent news. In the first half of this month, April, wholesale used prices already are surging despite weakening consumer sentiment, right? So consumers are concerned, they're pulling back. You would think they would not want to buy a vehicle right now with all the concern and with all the uncertainty out there. But what's happening? Prices are rising. So dealers are getting out in front of these tariff-induced price increases. And even though it's used cars that we're talking about, the way dealers are looking at it is the price of new cars are going to go up with the tariffs that are being imported. So more people will want used cars. So what's happening is they're raising their prices. It looks like wholesale used prices saw a sharp increase during the first half of April. The mid-month Manheim Used Vehicle Index consumer report rose to 207.1. That's 4.3% up from April 2024's reading. So prices are not dropping, even though when you look at the affordability issue, prices should be dropping, but they're not. All right, and again, just to underpin all this all goes back to the banks, the way money's loaned out, that there's no gold standard anymore, and the fact that they can just keep this propped up with more and more money being loaned out, lending to infinity, basically. So then some people say, well, at some point, it's got to reverse because people won't be able to afford their loans and delinquencies will rise. That's already happening. Delinquencies have been rising now, and car loan delinquencies are the highest they've been since the financial crisis over 20 years ago. 20 years? Not quite 20 years. 18 years ago now. Yeah, around there. Prices are going up still, folks, even though delinquencies are up, right? Why is that? Because banks, they're not worried about people being delinquent, right? We all know why, because there's no limits on the money, folks. No limits on the money. All right, but this continues here out of CBT. Tariffs were a major contributor to the price surge, and their impact on new vehicles influenced dealers to turn used inventory. Insights from Jeremy Robb notes that wholesale markets performance was weaker than usual in March. However, in the past week of the month, this month here, leading into April, things turned on a dime once the administration enforced the auto tariffs. So as soon as the news came out, dealers were on top of it. They're raising their prices. They're getting out in front of it. And some people will say, well, this is greed. This is greedy. And while I could see why some people would call it greed, what it is. It's just business. If somebody can make more money without breaking any laws, if they think that somehow people are going to pay these higher prices, they're going to charge higher prices, right? Greed or no greed. That's what businesses do. Businesses want to make as much money as possible. Price gouging, right? Until they pass a law that says you can only make so and so much profit on a transaction, it's going to continue to happen, folks. It's not going to change. And if it didn't get any worse because of the rising car prices, look at this. NPR, tariffs threaten to push auto insurance rates even higher. So how are tariffs going to affect insurance? Well, if the price of cars goes up and the cost of repair, the cost of materials for these vehicle repairs, if they're in a crash or an accident or stolen, any of those things, it's going to cost more for the insurance company. So guess what? Now you're going to see even higher insurance rates on top of the already high prices that we're already witnessing right now. And this is the worst time. This is the worst time for tariffs to be implemented because prices are already so high. And what we're seeing at some dealers is kind of a marketing ploy or an advertising ploy. And they're saying it's tariff-free pricing. They're saying they're selling their cars without a markup because of the tariffs. I think it's kind of a gimmick. But here's a picture here out of a recent article, NPR, showing a guy working on his vehicle out in front of a AutoZone. So did he buy the parts he needs at AutoZone? Is he doing his brakes? I don't know what he's doing. A slew of new tariffs, including some specific to vehicles, have many Americans reassessing their plans to buy a car. And we're already seeing the average year or the average age of a vehicle on the road now is already the highest it's been in many decades because more people are choosing to keep their older car instead of going out and buying a newer car right now. But even with that happening, even with people choosing not to buy a new car, prices are still continuing to go up. Well, they went up here in April. Now they're still level and they're still down from the peak, what we saw in 2022. But the fact that they went up earlier this month and that we're still even year over year, it's very interesting. Now, also the current administration came out and they're basically floating the idea that they may put a pause on the 25% tax on imported cars. And if that happens, maybe you'll start seeing prices come down. But who knows if that's going to happen. So do you want to delay your plans on buying or not buying a car? Make your decision based on what might happen or based on if they reverse this whole tariff/tax situation. All right, now let's listen to a quick report here regarding this tariff-free car advertising that's been going on here. Let's take a listen.
We're seeing higher prices at your local car dealer with President Trump's auto tariffs set to take effect next week. Yahoo Finance senior autos reporter Praz Subramanian is joining us now from a local dealership. Praz.
That's right, Josh. I'm here in New Jersey, Celebrity Motor Cars Lexus dealership here. Joining me is Tom Maiola, the owner of the dealership, and also a number of other brands in the area. So, Tom, I think a lot of people are talking about what's the tariffs going to mean? What's it going to mean for everyone here? What are you seeing right now at the dealership floor?
Well, we're seeing people come in, they want to buy cars because they're afraid. They don't want to pay that 10% additional. You know, the average car in the United States of America now sells for $40,000. So you're talking about a $10,000 increase. When you finance that out, it's about $30 a thousand. It's $300 more on a payment. They want to buy now.
You know, I was shocked to hear that $300 more additional to a payment that, you know, for some people, they're already paying almost $1,000 on a payment. You know, I think there's some talk about how
record number of people with $1,000 a month car payment right now.
The dealers, what are they doing to prepare to sort of insulate their customers from the tariff effects?
Well, listen, there's not really much we can do right now. The only thing we can do is build up inventory, try and get inventory from the manufacturers as much as we can, whatever's on the ground in the ports, and the same thing on the parts side because it's going to affect repairs. That same 25% tariff is going to affect repairs. Repairs are going to go up. And, you know, if they're not buying, consumers have to repair because they have to keep their cars on the road. You can't stop transportation.
So basically he's saying that the people that are waiting to buy a car are going to pay higher prices for repairing their vehicle. That's what he said. So now there's no way out of it, folks. You're trapped either way, buying a new car or a new used car or keeping your old car. Prices of materials and basically repair costs are going to go up as well because we import most of the parts. Yes, it's true. Now let's just rewind here a few months. We were told that by the current administration that the cost of living was going to come down. We were told that on day one they were going to come down. Then we chimed in after the first month. We said, well, it's been a month. Prices haven't come down. And what did I say was going to happen? I said, well, all the people that believe this, they'll probably just keep kicking the can down the road. After a month, they said, okay, what I said here is we're going to look at it in 2 months, and we're going to see prices didn't come down. And here we are nearly 3 months since the new administration. Prices haven't come down. Prices are higher now than they were. And people still keep making excuses. Oh, it's only been 3 months. We're going to check in 6 months. We're going to check in a year. We're going to do daily videos and get all the updates out here. And we're not going to see prices come down, folks. There's not going to be deflation. We're going to continue to see inflation. It may slow down compared to looking back a year prior, but it's still inflation. Prices are still going up, folks. That's what's going to happen. There's nothing being done here to stop this train, folks. The inflation train, full speed ahead, folks. It's not coming off the track. It's not being derailed. It might be slowed down, but it's still going. The inflation train is still going. If you know what I'm talking about, you know what I'm saying here. All right, but back on task here, we have more rich Americans now opening Swiss bank accounts because they fear what's happening here in the U.S. So to open up a Swiss bank account, you're fearing more than inflation. You're fearing an entire economy imploding, which would include bank failures. Otherwise, why would you take your money out of the U.S. bank unless you're getting a bigger return at some other banks? But I don't think that's the case. Sorry, I bumped the mic here. Swiss banks say they've seen a huge surge in interest and businesses from high net worth Americans opening investment accounts in recent months. And CNBC lays this out. Switzerland's neutral politics, stable economy, strong currency, and reliable legal system are all a draw for clients. While opening a Swiss bank account decades ago may have carried a trace of illicit tax evasion, today it's highly regulated and more widespread. So, yeah, a lot of those things are true. I mean, our currency, the dollar, is getting wild up pretty big lately, and we're seeing the run up in gold price too to go along with that. It correlates with that. And as I'm recording this today, it's actually gold 3,341, folks. Gold's on its way to 4,000. It's crazy times. And on that note, I should give an update here because I try to let you know investing and what I do, what I'm holding, what I'm not. The gold stocks that I've talked about here hundreds of times, the gold stocks that I've held for years, I'm actually selling off about 10% of my holdings of various gold stocks. And it's over 10 different mining companies and gold-related stocks that I have. So I'm not going to sit here and list them all, but I can tell you in general, I'm taking a little bit of profit. Only 10%, just a small profit, because I still see a lot more upside to gold. But I am taking about 10% off the table, just so you know. I'm not suggesting anyone follow what I do, but I did tell you here and promise you that I would let you know about any significant trades or drawdowns or buildups in any of my investments that I've talked about here many times. All right, but gold stocks and some of these mining stocks have been on a tear. Some of my stocks that I've been holding for years are already up, just this year, already up 50%. So I would feel very sketchy about not taking at least some off the table. And if they go up even more, I'm going to maybe even take another 10% off after that. We'll see how it goes. I'll keep you updated on my trades either way. All right, but consumers are still spending, including on entertainment items. They're not pulling back on certain types of entertainment. Look at this here. Netflix, another profit earnings beat as revenue grows 13% in the first quarter. So now here in April, we're going to start getting all these first quarter numbers. And of course, Netflix, more revenue growth, even though they raised their prices and they tried to stop people, or they did stop people from sharing passwords. And people thought that was going to make people leave in droves. Well, it didn't. They're actually still making more money and posting greater revenue. And by the way, speaking of Netflix, there's actually a really good show out there. It's called Black Mirror. And one show in particular has to do with finances and money. So there's this episode, I think it was the first or second episode of Black Mirror. So if you're already on Netflix, maybe check this out if you haven't already. And this is a British series, Black Mirror. Wow, first came out in 2011. Well, this year's season, season 7, episode 1, Common People. A medical emergency leaves a school teacher fighting for her life. Desperate husband signs her up for a system called Rivermind, a high-tech system that will keep her alive. So what they did after signing her up for this, which is like a brain implant, they kept raising the price, and they put more restrictions on what they were paying for. So eventually they couldn't even travel outside of their local area. It's kind of like a cell phone signal because they didn't get a signal beyond a certain radius. But if they went outside the area, she would basically pass out because the device quit working. Okay, kind of futuristic or high tech, but it's definitely possible. I mean, 10, 20 years down the road, who knows what kind of technology they'll have. The point was, though, this guy has to keep paying more and more just for basic functionality out of this medical device. And he ends up doing a lot of crazy stuff that I won't even talk about here because it's a very dark TV show. If you haven't seen it, it's kind of dark. So warning. If you haven't seen it, maybe check it out. Let me know what you think about that down in comments. If you've seen it, what do you think about that down in comments? They always are trying to get more and more out of these people, even though it's a medical device, kind of like the United States right now with the very high medical costs, right? We have the highest medical costs here in the U.S., I think, out of any other country in the world. And we're supposed to be the world's richest nation. You would think that the people here would pay less. If the nation is rich, why do people have to pay more for everything, right? So the whole talking point of we're the richest nation, it's a scam, right? All right, people, next, let's jump over into the housing market, home prices, the unaffordability crisis that we're seeing right now. Evictions are surging for both people renting, for most of your people renting, right? Homeowners that are locked in a low rate are actually doing better than what we're seeing in the rental market right now with the evictions that are skyrocketing. The number of evictions well above the number of people actually getting foreclosed on their homes. And here's a recent story. Facing eviction, disabled couple rally for support around their apartment. And is there anything sadder than seeing a disabled person homeless? I mean, come on. This is America, folks. This is the world's richest nation. We've got disabled people getting evicted. And even if you gave these people enough money to pay cash for a house, would they be able to keep it with all the maintenance, the upkeep, the taxes, the insurance? Even if you gave somebody a house free and clear, if they can't work or they're disabled or they don't have some sort of income, they're not going to be able to keep the home. That's just the way it is. And I found this out over the past few years, especially. I think since I bought my home in 2010, I probably put enough into my home to buy a whole nother house. New roof, new exterior, all the maintenance issues with the septic and everything else, plumbing, you name it. It's a very costly thing to own a home. So I could see why some people opt to rent. But then when you rent, you have things like this. You get evicted. And look at this. Another story here out of WLNS. Basically, it sounds like this renter lived under a slumlord who wouldn't fix anything. So she ended up making repairs herself, putting her own money into the home only to get evicted. Take a listen.
Her own money to fix her home, and now she says she's being evicted. It's our top story tonight at 6. Thanks for joining us. I'm Sherry Jones.
And I'm Siobhan Klepfer. Overgrown landscape, pipe problems, and no front door are all things one woman says she has had to fix.
No front door?
And 6 News has told you about this landlord before, Christian Nwabo, and he's currently being sued by the city of Lansing for housing code violations. And court records show that he's trying to evict tenants.
Lansing, that's in Michigan. It's cold. No front door in Michigan.
Even those who live in some of his red-tagged properties.
And that's exactly what this one woman says happened to her. Our Rachel Ramsey spoke with her. She's here for you now with more on this situation. Rachel?
Yeah, Siobhan, Sherry, the renter, Kelly Holy, says Christian Nwabu agreed to put the money she spent fixing up the home towards her rent. But she says he didn't honor that agreement, and now she has until the end of the month to move out. She says she doesn't know where she'll go next, and that Nwabu should have never had someone living there in the first place.
Empty promises the whole time.
Kelly Holy says the day after she moved into her Meridian Township rental home in July of 2024,
there was a city inspection and the house was red tagged.
A red tag meant she couldn't live there, but with no lease and nowhere else to go, Holy says she reached out to landlord Christian Nwabu.
His response was just don't make any noise around the.
So just one, folks, just one of many, probably millions of stories about slumlords, lack of affordable housing, making people have to live in these places that are just run down. And your landlord's a slumlord, and a lot of times. All right, still on the topic of housing, we've got a new chart out here out of Wolf Street. And let's go ahead and try to enlarge it here as much as we can. And what do we see here? We see a increase year over year, but the increases in home prices are slowing. So now we're up at about, 1% year over year. nationwide. Of course, coming into the health crisis, going back a few years, we saw prices explode to the upside with nearly 18% year over year was a norm. Then it dropped back down and went up. We did see some year over year declines briefly in 2023, but then prices started climbing again to about 4.5% year over year gains. Now we're down again to 1%. We should have witnessed massive deflation, like I was talking about at the beginning. The health crisis should have brought on massive deflation, but they put a floor under home prices. They stopped evictions. They stopped foreclosures, which you could argue is a good or bad thing. But as far as affordability, it was a bad thing because it made prices go up, because when people didn't lose their homes, then the supply was just restrained. So there wasn't more new homes put on the market. Therefore, home prices remained elevated. The lending kept continuing. Big money came in, still bought a lot of homes, keeping prices propped up, folks. And it's looking like that's what's going to happen into the future. I mean, even if prices don't go down, even if they remain where they're at now with zero price gains year over year, homes are still unaffordable, folks. You're still going to see all these stories about people getting evicted, and the housing crunch will continue unless something big happens, folks, like some sort of black swan event or some sort of massive change in the entire structure of this financial system and the way the money is created, folks. So let me know what you think about all this. The housing news, the evictions, the sad disabled people getting evicted, people pouring thousands into their home only to get evicted because they have a slumlord landlord. What did we talk about at the beginning? The tariff warnings, the car prices going back up now, dealers getting out in front of the tariffs. It's craziness, folks. It's not going to stop. Please let me know what you think about this down in the comments. Oh, and are you selling off your gold stocks? If you have gold stocks like I am, selling off a little bit, let me know down in the comments your investment strategy. Otherwise, we'll see you guys here on this next report. Keep stacking as always. Bye for now. Peace.